Welcome back. I'm Ted Thomas, and in this episode, how to buy tax lien certificates in California. And I'm going to give you some tips on how to make money on those certificates when you do buy them. And we're going to talk at the very end of this video how to avoid mistakes at the auction. There's two key mistakes that you want to miss, and if you don't, you could really lose a lot of money. And that means you'd lose your assets. So stay tuned, and I'll come right back. Okay, how to buy tax lien certificates in California. You can't do that, folks. They only sell tax deeds. That means they sell tax defaulted property. So stay with me. This is a really meaty lesson, and there's a ton of stuff to learn. So you already know there's 50 states. There's over 3,000 counties, another 1,400 municipalities. They're all taxing districts. In California, they have 58 counties. They do not sell tax lien certificates. Every county I happen to know, because I lived there for 35 years, is authorized to do that. However, the treasurers don't want to sell tax lien certificates. And you'll see some of the reasons for that here in just a minute. I don't know that the reasons to benefit you, but the taxes that they are trying to recover are tax deeds, so we're going to talk about it. All right, so here's how it all takes place. First of all, if people don't pay the tax, the local county will put them into default. Now, California's a liberal state. They allow things that no other state allows. For example, California should seize the property and sell it, but they issue the tax default, and then they go 5 more years before they do anything about it. So each year they tell the property owner, you're in default. 1 year, 2 years, 3 years. Some of the properties end up 7 years in default. They have not contributed anything to the state coffers, and now they're finally going to get to go to the auction. Okay, I don't make the rules. I'm just here explaining how to do it. So I'm just an educator. I'm not an attorney. I'm not a politician. I'm just a person that's got a little bit of street smarts that learned this in California, and I'm going to tell you guys exactly how to do it. All right, now, these properties are going to come to auction, and it's going to take a long time before they get there. So they're building up a ton of debt against the property. So if you can buy one of these properties, it's going to have anywhere from 5 to 7 years of back taxes due on the property. All right, now these auctions can be offline and they can be online. Now they can be small sales, they can be big sales. But let's make sure we understand this. So if this is the first time you've tuned into one of my lessons, I'll tell you this about taxes. Every property in the United States has to pay property tax. Half of the states have tax lien certificates. That means they sell a certificate which pays 16 or 18, 24, up to 36%. The other half of the states, like California, they have the right to seize the property. So they put the property in default, then they send notices. That's called due process. They go through the due process for 5 long years before they do anything about it. So the tax auctions are very lucrative ways to buy property. You can buy property for 10 cents, 20 cents, 30 cents on the dollar. But all properties, whether tax lien certificates or tax deeds, the mortgage is wiped out. Now, I don't mean to say that they go out and they rip up the mortgage. They don't do that. What the county does is they wipe the mortgage off the property records. So that means when you buy, you do not have a tax or a mortgage to pay. So there's no mortgage to pay. So in California, they don't even call it a mortgage. They call it a trust deed. So that trust deed is the same kind of promissory note that a mortgage would be in New York or a contract to sale would be in the middle part of the country. It's the same promissory note. However, it has different terms to it. So the point is, what is the county going to do? They're going to wipe that off of the property record before you buy. So when you buy a property for 10 or 20 cents on the dollar, it will not have a mortgage on it. So that's a huge advantage to you. Now, do they do all the auctions online or offline? They do both. Sometimes they do both at the same time. Like they could be selling online at the same time they're selling in the room. It's up to them. Who decides? The treasurer. The treasurer is the most powerful person in government. Put that in the back of your mind. Most powerful person in government. Now, I've been teaching this online and offline for well over 5 years. So I have clients in Canada, I have them in the UK, I have them all over Asia, I have them in Mexico. You get the idea. So we're teaching people how to do this online. All right, so now you get a basis of tax liens, basis of tax deeds. California is a tax deed entity. So that means they're going to sell property, and when they sell it, you're going to get a mortgage-free property, and you're going to own it. it's going to be a tax defaulted property or what you call a tax deed. Now, there's all different size counties in California, as you know. There's 58 counties, round numbers, 40 million people there, but they got a lot of property, all right? Now, a little county like Marin County that's really wealthy, just north of the Golden Gate, they might have 100 properties. That'd be a real high number for a place like Marin. However, if you go to Los Angeles County, here, probably the 5th wealthiest city in the United States, they'll have anywhere from 1,500 to 3,000 properties that they try to auction in one day. Now, I cannot snap my fingers fast enough to tell you how fast the auction goes. I've been to that auction at least 5 times, and the properties go so fast that you can snap your finger and another property's gone. All right, now those auctions, you need to know what you're doing. You don't want to go to that auction unless you have seen the property. All right, that auction in Los Angeles, they will charge $5,000 before they will give you a bidder's card. Now, you get your $5,000 back if you don't bid, but the point is they're trying to restrict the auction, so they'll charge $5,000. All right, now they will sell properties at those auctions, and they'll sell them fast. If they don't get them all sold, sometimes they'll conduct a subsequent or a second day auction, and they'll cut the pricing in half. Now, there are auctions in California starting now, 2021, where they'll actually lower the price to $100 with no mortgage. Now, you'll need to do your homework to do this, and we don't have time in this video to go through every step. So let's do a little bit of a review. So this lesson was about how to buy tax liens in California. Well, it's really not a lesson, it was an answer to a question. All right, don't worry about tax liens because they're not going to have them. The owner has plenty of time to pay taxes in California. There's many people buy, never pay taxes, and sell before they have to pay tax. That doesn't mean that the property didn't accumulate tax. All right, so there's 40 million people, 58 counties, so you can look at all of those counties. Now, the small little places like Maricopa or something like that, you're going to find out there's not a lot. There's maybe 50 or 75. Place like San Bernardino County, which is the biggest county in the world, that one county alone will have as many as 3,000 tax defaulted properties. Los Angeles can have as many as 1,500 or 2,000. All right, they sell online and offline. We'll teach you both ways. Okay, now don't forget, you've got to avoid the mistakes. All right, now to avoid the mistakes, don't buy a property based on a picture. If you're going to do anything, make sure you learn how to use the GIS mapping system. Okay, that's the Geographical Information System. We teach that. It's much better than Google. This is a satellite that's aloft and they have pictures of the property. All right, the point is, you need to learn about the first auction. There'll be a second auction where they'll drop the price. Sometimes they'll drop the price all the way down to $100. So that's about all the time I have today. So if you folks that aren't clients of mine, you want to be part of my community, I'm going to tell you how to do that, and then I'm going to come back and answer a couple of questions. So number one, if you're learning a lot from what I'm talking about and you want to be part of the community, well, here's what you do. Right below me, you can register, be part of the community, and I'll have a gift for you if you register, and that gift is a mini course, and it's a fast start course that'll teach you about tax liens and tax deeds. You can do the whole thing online in about an hour. So all you have to do is go below me and do that. But before I go, I have a couple of serious questions. Okay, the question is exit strategies. Okay, well, there's a lot of those. So the first thing I would start out with is figure out, number one, what the value is that you're willing to pay for the property. Then figure out what you're going to do with it. All right, you're probably going to sell it. And if you're going to hold it, that's not an exit strategy. That means you're just going to hold it. But if you're going to have an exit strategy, you're going to have to say, what can I sell it for? That's going to require research on Google, probably MLS, go to the county tax collector, know what the value is, okay? That's one exit strategy. I could go through a half a dozen of those, but I don't have time today. Okay, so let me give you a couple of ideas here that are very important to you, and I told you to put these at the end of the video, and here's the important thing. Number one, don't buy any property unless you've seen it. Now, if you haven't hired someone to go look at it and you haven't had boots on the ground, do not buy that property. Yes, we have plenty of ways to teach you to do that. There's companies that'll go look at it. You don't want to buy a property you haven't looked at. Why? What if there was a hurricane? What if there was an earthquake? What if it wasn't there? It could happen. All right, and it does happen. Okay, so that's my number one rule. Number two, don't buy a property unless you have an exit strategy, and that means you know what you're going to sell it for. If you don't know what you're going to sell it for, don't start bidding, because if it's an online auction, I will assure you there'll be someone that wants to outbid you, and you're just going to keep running the bid up, and you might get right past the price you could even sell it, and you won't make any money. All right, so I'm Ted Thomas. If you want more information, just go below me and get that mini course, and I'll see you at the next video.